Shane Ellis from Iowa State is our marketing analyst this week. Shane is an extension livestock economist. We talked to him in West Point at a time when cattle supply is down, exports are up, and if the recession is in fact turning, consumption should rise. So we started by asking, what's the downside?
We've definitely seen a lot of strength from our consumer side. The domestic demand has really been holding its own lately, especially with the increased price of cattle and beef at retail. We really have to give hats off to the consumer for the amount of demand and quantity that they've been consuming, even at the current prices. What we have to worry about is we've had this improving demand since basically the end of 2009. Improved returns also at the cattle margins as well as prices during that same period of time. What we have to worry about is in the second half of this year, could there be another turn in the economy? Once again, that's, I think, the biggest worry right now. Right now we have a tremendous amount of bullish pressure pushing on this market, and so that's why we're seeing these futures prices going out into the end of the year and in the coming year of over 130 for live cattle. That's a fantastic price. That shows us that bullish pressure. How much can it really handle if we start to see the economy start to take another downturn?
And one of the bullish factors is that supply, and as you noted, around 91 million head in inventory in the U.S. Should we expect that to turn, and if so, when?
I think that we're starting to see, well, it's a big boat to turn whenever we're going to increase a number of cattle here in the United States. We tend to go through a 10-year cyclical period. We may start to see those total cattle numbers start to turn and increase by the beginning of 2015. It takes a while to have the heifers develop to go in as replacements, and we need to not be killing as many cull cows as we have been also if we plan on increasing our calf crop.
And one of the things you mentioned today is there's not only a battle of acres between corn and soybeans, but also if you're going to try and increase the cow numbers, there's a battle of acres of where to put them.
Absolutely, and with the southern plains and the drought that they have had last year and in the coming years, they're not going to be able to rebuild that same capacity that they had a few years ago overnight. It'll take several years of decent moisture before we start to see those cow numbers back up to that same level that it was a few years ago. Where does that leave us here up in the northern plains states, where we have that competition in many areas between pasture land and row crops? Where do we put the cattle? Well, we have to improve the carrying capacity of the pastures that we already have, or somewhere along the line we're going to have to pull some acres from some place if we plan on increasing our cow numbers and maintaining those increased numbers in the coming years.
You mentioned the consumer earlier. Step back just a bit further. What's the mindset of the retailer right now for a person who's buying expensive beef and trying to move it on to a consumer at record high prices?
Well, definitely what we have been seeing, fourth quarter of last year and even the first part of this year, retailers were not in a big hurry to sell the beef that they had purchased at a high price at a loss. And so that's why we didn't see a lot of beef being featured, didn't see a lot of sales at the retail counter where they were trying to move massive quantities. They just hated to sell it at such a loss. And because of that, we've seen a little bit of a backlog at the retail level where retailers aren't necessarily hurting. They've got plenty of supply that they had to pay too much for. They're not willing to quite bite the bullet yet. They're still hoping to pass that cost on to the consumer.
As we look at high corn prices going into summer, describe your ISU profitability model and how that lays out with what we're going to see for the next few months here.
We try to predict what the profit margins can be, or we show what profit margins could be locked in, what kind of margins you could have between your key inputs of corn and feeder animals, margin between those two key inputs, and the value of the fed animal. And we try to project that using futures prices, adjust it for the basis. And looking at that, we see that animals that are on feed right now, it's looking pretty good. We're going to see some pretty nice profit margins going on through for animals that are on feed right now. Once we get into animals that are being placed in the coming months, there's not necessarily a lot of promise, just the increased cost of those feeder animals is really causing those margins to collapse and be incredibly tight.